The stock market continued lower today as Adobe stock got absolutely destroyed. It fell by nearly 17% today, which is just an insane drop. In this video, we're going to talk about the big things you need to know that happened in the stock market today and what to know heading into tomorrow. Tom, what's going on in this crazy market?
Yeah, it was a crazy day, Mike. Looking at the heat map, stocks were down all across the board, but the big thing that really catches my eye today is that Adobe stock right there, down 16% in the technology services sector there. And looking at their stock today, Mike, like you said, 16% plus to the downside. It would have been even worse at the low of day, and they had a pretty bad acquisition. I'm not going to say it's a bad acquisition, but what I will say is that they are definitely overpaying for this company, and that is probably part of the reason why they're down so much. Now, Mike, as we do know from history, a lot of times the companies buying out another company, they usually end up going down a little bit. But I will say Adobe going down 16% is a pretty big surprise. And part of the reason this is happening is because they're actually paying 50 times Figma's revenue here. So this is pretty big, Mike. Figma is a direct competitor to Adobe, and they're going to actually implement some of their services into Figma's platform. But nonetheless, Mike, it's a really big deal, and it definitely hurt Adobe stock today. They're making new 52-week lows.
Exactly. So like Tom just said, Adobe is about to own one of their competitors, and that is not a bad thing. In a lot of situations, that can actually be a really good thing. But the main problem comes at the price that they're paying. 50 times their competitor's revenue. That is insane. Let's say you had a company that, like, let's say someone had a business, Tom, and let's say one of their competitors did $1 million in annual revenue. Not profit, not earnings, but annual revenue. That would value the competitor's business at $50 million. Like it's not, it should not be like that. That's just a whack valuation. And honestly, it reminds me of a lot of the valuations that we were seeing in early 2021 and even in 2020. You know, like a lot of stocks just had crazy valuations, and eventually the market corrected, as we all know. So Adobe's taking a beating right now, so keep that in mind. It's down 17%. Tom, what are the all-time highs on this one? And, you know, what are you seeing in terms of price action?
Yeah, so the all-time high on Boeing came back all the way, it looks like in November of 2021. They hit highs up there right around $700 per share. Now they're all the way down today, hit a low all the way down in after hours around 308.25, and it looks like 309.13 right there at close. So definitely some big drops to the downside, Mike. I would not be surprised if it continued a little bit lower, maybe down towards 300. I could see us maybe hitting 300 over the next couple days, possibly, but it's a big drop. It's obviously a really big move for Adobe. And honestly, Mike, looking at Adobe stock before the drop happened, it looked like they were actually holding up pretty well there at that 360 support, and then it just kind of broke right through with this bad news today.
Yep. Alrighty. So interesting stuff there. But what else do we have going on in the market?
Yeah, so there actually was some pretty big news this morning between railroads and the labor unions. They actually reached a deal to avert a strike, which could have actually caused a lot of train cars, or I guess freighters, to go idle. So this is actually a pretty big deal, Mike. If this strike would have gone through, it's saying here that about 40% of the nation's long distance trade is moved by rail, and more than 7,000 trains would have been idled, costing up to an estimated $2 billion per day, which is no joke. I know that a lot of these bills going through Congress and stuff like that have been valued at a lot of money, and $2 billion a day is not going to help our inflation situation at all. So I'm glad this deal got averted. Biden actually came out and thanked everybody involved, but I figured I'd mention it. I will say it didn't really hurt or help the markets too much, Mike, but it obviously did cause some pretty big disruptions early on.
Gotcha. So one other stock that's worth watching is Disney. This stock has been all over the place lately, and their CEO is in the news. So what's happening?
Yeah, it's actually a pretty big deal with ESPN, which is actually owned by Disney. So their CEO, Bob Chapek, is saying that ESPN will never take bets and that they're pretty much going to stay as a standalone business as ESPN under Disney. So they're not going to become Bet ESPN or anything like that. They're going to end up taking a partnership with some type of sports book that accepts bets, like they're saying here. So that could be DraftKings, FanDuel, Caesars, BetMGM. There's a whole bunch of different betting companies out there now. And I know that sports betting has been becoming more legalized and it's kind of been more implemented into society over the past few years. But I figured this was very interesting, Mike. I know that we've been talking about DraftKings a lot over the past couple of years. Hopefully they pick DraftKings to be their partner. But overall, Mike, I think that we might see something happen with this sooner rather than later. They didn't really give us any type of timetable or anything, but it's pretty cool to see that they are looking for that big partner.
Exactly. So I own Disney and DraftKings. I'm with you, Tom. I really hope Disney ends up working with DraftKings as the, I guess you could say, sports book. But yeah, either way, it's kind of big news for both stocks because Disney's will be able to increase, their ESPN revenue through the partnership. And then it also brings a giant opportunity for whatever sportsbook is selected as the partner, because when you're, blasted all over ESPN, you're going to bring in a lot of bets. So good stuff.
Yeah, exactly. And looking at Disney stock, which obviously ESPN is under Disney. So looking at the stock here, Mike, it's actually been holding up quite well, in my opinion, over the past couple months. Whenever I look at a lot of stocks like Meta or Zoom or even like Square, a lot of these stocks are down here pretty close to their lows. And then I go ahead and I look at stocks, obviously like Disney, which is obviously ESPN as well. It's holding up quite well. And I'm really happy to see that it's still up quite a lot from its lows. Now, it's not a ton percentage wise from low to high, given that Disney is obviously a more established stock in the market. It's not like Zoom or any of these growth stocks. But nonetheless, though, Mike, it's holding up pretty well on the chart. And we can see that it's still up a lot, pretty well over $100. So I'm pretty happy to see the stock moving like this, and hopefully it can hold up. But I will say the overall market did drag it down a little bit today.
Gotcha. So in terms of like the rest of the week, there are not too many other major earnings events, but we do have some decently important economic data tomorrow, and that actually has to do with consumer sentiment. So we have the Michigan Consumer Sentiment preliminary reading coming out at 10 a.m. Eastern Time tomorrow morning. So it's around 30 minutes after market open. These reports have moved markets in the past, so just keep it on your radar. I would not say it's as important as like an interest rate decision or an inflation report or anything like that, but it does have some market moving potential. Again, that'll be 30 minutes after open.
Yeah, and Mike, I bet if we see a lot of selling come out right at market open and then that bad report comes, it might just like add fuel to the fire. And I will say SPY had a pretty bad day today overall. So I will be a little bit worried if those sentiments are bad. And honestly, Mike, I would not be surprised if the sentiments were worse than expected, because as we know, the SPY has been taking some pretty big dips this week. And I'm sure that that's been swaying some of those numbers in the bad direction. So I can't wait to see what happens with SPY though, Mike. Today, it actually fell under 390, hitting lows of the day down around 388.75. So looking at the market for tomorrow, I'll probably look at that low of day at 388.75 and watch that as a decent support. Honestly, I would not be surprised if it fell down even lower. We started to really see some acceleration there at the end of the day.
Tom, I really think we're at a really major level for the SPY. And the reason I say that is because if you look back over the past couple weeks and the past couple months, 390 has been consistently a level that the SPY bounces off of. We can see that it's bouncing off of, or it's right at 390 right now. Just last week, it bounced directly off 390. If you go back to like July 26th or so, direct bounce right off of 390. And then it had a giant, I guess you could say, rejection at 390 in the end of June and like even the middle of July. And there have been even more bounces that I'm not even counting. So 390 is a pretty crucial level, and we're right back to it. So, this is like a key breaking point. Like I think it's very important that the market holds above this, because if it doesn't, what's the next support, Tom?
Yeah, exactly. So the next support I'm seeing in the shorter term is somewhere down around 388.50 below 390. But honestly, if we start to fall below that 390/388 level, I could see us falling back down and potentially kind of falling back down through that gap again, back towards like 384 to 385. So I could see a big sell-off happening if we do break below that. And I will say, Mike, there's also this pink trend line here that it looks like we're starting to break pretty well below. So I am getting a little bit worried that we might see that push back down towards 384, 385. And I hope it doesn't happen tomorrow to end the week with a negative note. But I wouldn't be surprised, Mike, because who knows, maybe that sentiment reading might add some fuel to the fire.
Yeah, and when looking at support and resistance levels and just key points, you guys have to keep in mind that these levels do need a little bit of wiggle room. For example, let's say we're looking at 390. That doesn't mean that if the SPY goes to $389.99, it's like the biggest breakdown of the century and it's the end of the world. Like with any level, whether it's support, resistance, or any level in general, you have to give it a little bit of wiggle room, because the market just naturally moves, and you just have to account for that. So keep that in mind when looking at any support or resistance level.
Yeah, that is actually a really good point, Mike. And I'm glad you said that, because some people might see a break below 390 and be like instantly buying puts. But yeah, then you can see though that 388.77 was actually the low of day today. So yeah, it does matter. Give it some wiggle room, guys. And I think that's a really good point, Mike. I know that can definitely hurt some people out there, especially in the options market where timing is very crucial.
Yes, exactly. Well, Tom, let's get right into the momentum plays for tomorrow. With the first one, we have WBD to the upside, and this stock was green today.
Yeah, it was actually green, up 3.5%. It was nice to see that some of these growth stocks did pretty well, but go ahead and make them break above 1335.
All right, so that's the only green momentum play. With the next one, we have Google to the downside.
Yeah, poor Google here. Go ahead and make them break below 102.37, right at that low of day there towards the end of day.
All right, then with the next one, we have Disney, also to the downside.
Yeah, I know we talked about Disney earlier. It ended up being pretty red. Make them break below 110.70.
All right, so we're watching Disney and Google for potential day trades to the downside tomorrow, only if they break below the levels Tom listed. And then we are watching WBD for a potential day trade to the upside tomorrow, only if it breaks above the level Tom listed. But guys, if you like our videos, make sure to subscribe. We post brand new videos every single day. So subscribe if you're new. It's awesome to have you, and let us know what stocks you're watching in the comments down below. We read basically every comment, and if you guys want us to cover anything specifically, we can definitely do so. So comment down below. Tom, do you have any favorite setups heading into the end of the week?
Yeah, Mike, I figured, we talked about ESPN a little bit with DraftKings. DraftKings actually had quite the day today, closing up 4.46%. Like we talked about, some of these growth stocks actually did pretty well today, along with even Netflix. Netflix had a pretty good move. And I noticed even some of these cruise lines like CCL, RCL, and stocks like that were breaking out, especially early on in the morning. So I was happy to see some sectors go green. I know the financial stocks actually held up pretty well too. So I know the overall market was down, but we did see some positivity creep in today. Even I think Tesla was a little bit green. Yeah, 0.38%. Not the best day ever, but definitely fairly good on a day where so many big stocks like Apple, Microsoft, and stocks like that were red. It was good to see some of these green stocks mixed in. Like I said, especially with DraftKings, Mike, that one was especially pretty good today. 4.46% on a day where SPY's breaking lower. I'll take it.
Yeah, let's go. It's kind of rare to see DraftKings booming up on a day when the market's tanking down, but I am definitely not complaining, so love to see it. Before we close out, we want to give a giant shout out to today's member of the day, and that is D2 Smooth in the Stocked Up Discord. You've been in the chat for a decent amount, I guess you'd say over 2 years now, since April of 2020, I believe, and your activity has definitely been increasing very recently, so definitely keep it up. And thank you guys so much for watching. watching. Don't forget to subscribe if you're new, and let's end the week strong.